Hello and welcome to this very special edition of our Luminary series. Today's webinar is intended to mark International Women's Day, a day where we encourage you to show your support for the achievements of women and girls, not just in financial services, but in all aspects of life. Now, this global movement really confronts the gender inequalities that continue to shape our lives and provides a call to action to remind us that whilst progress for women's rights is happening, it isn't guaranteed. Coming together to shine the spotlight on some incredible women who embodies this year's theme of give to gain, mentoring and inspiring the next generation of change makers. Now, I'm sure many of you will already have attended events and webinars celebrating International Women's Day, so sincerely thank you for choosing to spend part of your morning with us today. We really do appreciate your time and support. And because we know that your time is precious in true Luminary style, we are mixing inspirational and practical with structured CPD content on markets and industry and regulatory updates. Now, housekeeping, I'm going to keep this to a minimum, but whilst we are talking about CPD time, your CPD certificates will follow via email after you've completed the short survey that will automatically pop up at the end of the session. Copies of the slides used today and a link to the recording will also be supplied. We're also going to share with you how to register for our in-person 2026 tour, which will be taking place across June as we visit Edinburgh, Manchester and London. If you like what you see today and you'd like to join us for more yoga, mindset education and inspiring storytelling, not to mention lunch and networking with like-minded peers, then do ensure that you grab your space and register to attend. Okay, back to today, and if you have joined us before, well, what comes next is going to be no surprise and a welcome wake up. So make yourself comfortable. If you haven't, get ready. We're going to interact with yoga instructor Emily Harding. Emily is the founder of Differently Wellbeing, corporate wellness events agency, and also creator of The Joyful Wild, an inclusive online yoga studio which will make you more confident in all aspects of your life. It also caters to workplace sessions, injuries, and disabilities. So enjoy.
Hello, everybody, and welcome to this incredible webinar for International Women's Day. So my name is Emily Harding. I'm a yoga teacher. I'm the founder of Differently Wellbeing and the creator of the online yoga studio, The Joyful Wild. And I'm so happy to be here with you today. We're going to take 15 minutes for you. And this is such an important thing to do, to give yourself this time to slow down, to reset your nervous system. And today we're going to be really honoring our bodies and our community of women together. So all I'd like to invite you to do, you don't have to do anything, you're going to delegate to me. So just sit in a comfortable way. You might sit at the edge of your chair. I've got a nice swivelly pink one, but you can obviously be using whatever you're in. Place your feet flat on the floor. And you might like to place your hands either face down on your thighs or maybe turn them up to the sky. Or if there's any other way that feels restful with your arms, depending on what's going on in your body, you do you. If at any point you need to lean back into your chair to support your spine, also do that. The main thing is we'd like you to be comfortable but still alert. So let's take a moment here to just soften your face and allow those eyes to close shut. And all you have to do in this moment is simply arrive in your body. So I'm going to take you through a little bit of breath, a little bit of desk yoga, and a little bit of meditation. All of which will hopefully leave you feeling focused, clear, and really uplifted. So right now, I'd like to invite you to simply start to notice the way in which you are breathing. So that doesn't mean fix it or change it. Simply start to notice how you're breathing. Are you breathing in through the nose or the mouth? Are you feeling the breath into the chest or the belly or somewhere else different? There's no judgment here. No judgment on what your body is doing right now. And what we're going to start to do is try to deepen your breath. So I'd like to invite you to breathe like you love yourself. Like breathing could be the most important, powerful thing you can do today to support yourself. So if breath became a way of loving yourself, how would you breathe? And I'm hoping that perhaps nearly all of you have started to take even bigger, more expansive breaths, slowly down and in through the nose, into your belly, your precious, wonderful, soft belly that has to be soft. Let it expand. We cannot breathe to our fullest capacities, and we cannot live to our fullest capacities when we're trying to squeeze our belly in, when we're trying to be smaller. The two go hand in hand. So let's practice right now, expanding our belly as far to the front, sides, and breathing down into the back as you can. And if this brings up any sort of emotion, and giving yourself permission to be round and be soft, simply just in the belly, that's okay. Let it come up as well. As women, we're taking back the narrative about our bodies, and it's been slow going through the last few decades. But we're at a turning point now, and each and every one of us is a part of that beautiful upward curve towards what is true and right for us. We're going to start by doing a little bit of slower breathing on the exhale. So we're going to breathe in for the count of 4 and exhale for the count of 5. So this is going to help to slow everything down, to help your nervous system to calm down if perhaps you've had kind of a morning of it already anyway. So whenever you're ready, we're going to breathe in through the nose to the count of 4, breathing in 1, 2, 3, 4. Exhale through your nose for 5, 5, 4, 3, 2, 1. Breathe in for 4, 1, 2, 3, 4. Out for 5, 5, 4, 3, 2, 1. In for 4, 1, 2, 3, 4. Out for 5, 5, 4, 3, 2, 1. In for 4, 1, 2, 3, 4. Exhale, 5, 4, 3, 2, 1. And again, inhale, 1, 2, 3, 4. Exhale, 5, 4, 3, 2, 1. Just take a couple more rounds just here on your own. Keep your face soft. One more round. You're doing brilliantly. And release. Beautiful. And just take a moment here to just sit, to just notice the effects of that breath. And then I'd like to invite you to gently start to stretch your arms up nice and high, open your eyes, take a big full body stretch, and then wrap your arms around yourself. Give yourself a big hug, rocking from side to side. It's twofold this. It's a very sort of positive, energetic experience with yourself, by yourself, but it's also helping to start to stretch into the shoulders and the back. So just give everything a little wiggle. And then we're going to lay those hands back on the thighs. So we're going to start by bringing in some desk yoga. So we do a lot of desk yoga at Differently Wellbeing. It's all about meeting you where you are. You don't need to put your lycra on or roll out your yoga mat. So we're going to inhale, roll the shoulders up, and exhale, send them back. Inhale with your breath, roll the shoulders up. Exhale, send them back. And move your arms as much as you need to so that you feel like the arms are sort of gliding rather than crunching in the sockets. So again, this is about embodying the shape that you need to make that feels best for you. Not the shape you think someone else on the call is making or the shape that you've seen someone else make before, but really leaning into what your beautiful, brilliant body actually needs. And we're going to freeze and we're going to change direction. So we're going to roll it up and come down. Nice. Inhale, roll it up. And come down. Gorgeous. One more time like this. Inhale, roll it up. And come down. Stunning. Sitting up nice and tall still. Shoulders back. From here, we're going to drop our right ear down to the right shoulder. So it's this 45-degree tilt down ear to shoulder. Feel the stretch through the left side of the neck. You're going to take your left hand, make a fist with it, pull the fist inwards towards the inside of your wrist. So we're stretching all the way down the left side here. Big breath in. Slow breath out. Breathing like you love yourself, taking up space with your breath. Wonderful. And then slowly release, drop down with the chin, left hand goes down, and we're going to roll it to the other side. So from here, stretch your right hand out, make a fist, gently pull it back towards you. Big breaths in. Big breaths out. Big breaths in. Big breaths out. Nice. One more breath like this. Every time you notice that your mind is wandering off, just come back to how you're breathing. That's it. We overcomplicate so many things. As women, we're told we must overcomplicate things. Everything must be this, that, and the other, but bring it back to your breath. Good. Just doing one thing at a time, nice and slow. Beautiful. So from here, we're going to open up the elbows, bringing them roughly in line with your shoulders. Don't worry if the shape isn't the same as my shape. Again, work on what feels best in your body. You're going to spread those fingertips wide. We're going to puff the chest forwards. So really stick the chest out towards the front. And as you exhale, you're going to round your elbows and squeeze the elbows towards the belly button. So I'll show you from the side. We inhale, puff the chest leaning forwards. And exhale, make it all glide. So we're really working into the spine. Inhale, open up. Exhale, squeeze it in. No matter where you are in perhaps your hormonal cycle today, or if you're peri or postmenopausal, it's all welcome here. Anything that is changing how you feel today from any given day, just work with it, right? We don't have to always be doing more, right? So just be nice and soft, nice and gentle for yourself. Give yourself that permission to do less if that's what you need to do. And then release. Gorgeous work. We're going to do some twists. And again, really think about breathing into the belly. So we're going to take the right hand next to us. So on whatever you can hold on to. Maybe it's on the side of the chair. Maybe it's wrapping around behind it. Whatever feels best for you. Take a deep breath in. And exhale. Bring your left hand to meet it. Maybe on the right side of your thigh. Maybe also on the chair. Slide your right shoulder back. Sit up tall. And look around behind you. The feet stay firmly on the floor. So we're not trying to go the furthest, we're simply finding this twist from the base of the spine all the way up to the base of the neck. In whatever way that looks or feels for you. Now breathe into it, breathe into this shape. We're not trying to push, we're not trying to force. There is no punishment here in your brilliant body. Nice, take a last moment here. Let yourself softly come back to center. There tends to be a real springiness when we come back, so just be mindful of that. Wonderful, we're going to take it to the other side. So big breath in, bring the left hand around behind you. And as you exhale, right hand onto the left side of the thigh and twist around. Draw your back left shoulder back, sit up tall, gaze around behind you. Get your eyeballs involved. This might sound like a really weird cue, but try to look back behind you. We need to sort of work the eyes as well to keep the eyes fresh, to stop them from feeling tired. So yeah, get your eyeballs involved. If you feel like you're giving crazy eyes to the plant or the cat in the back of the room, that's okay. Big breaths in, big breaths out. Gorgeous. Nice. Take a last breath here. And slowly, slowly allow yourself to come back into the center. Gorgeous work. So whenever you're ready, nice and slowly, we're going to think about starting to slide back into our chair a little bit more. So we're going to come into our closing meditation and intention. So you can either stay sitting up as tall as you were before, or if you want that little bit of support, feel free to take it. All that I ask is that you make sure you try to stay in this state of relaxed alertness, but sometimes the sleepiness can come in, right? And that's okay. That's a testimony to the fact that we've finally calmed the nervous system. So it's all welcome here. So close your eyes down again. Maybe hands on the thighs, maybe palms to the sky, maybe even you'd put first finger and thumb together and extend your other 3 fingers out. This is known as a mudra, which is a hand seal or gesture. This is known as chin mudra. So this is thought to really help with creativity, inspiration. So if you'd like to really embody a little bit of that today, feel free to take this hand seal. So sat up nice and tall. Just noticing the sensations of the breath and of your brilliant body just as it is right now. Try to soften the space between your eyes. And I'd like to invite you to think about something really nice that you might say to a friend. And then try to turn that back on yourself. What is a nice compliment that you can give from the flavor of a friend or a loved one back to yourself? And even better, can you also give yourself a compliment about your body just as it is today? We're going to sit in this softness and this stillness, and we're just going to contemplate and meditate upon this closing theme that I'd like to share with you. All of us as women have experienced in one time or another, whether personally, professionally, socially, just how hard life can feel and how things can feel stacked against us. Against our physiology, against our cycles, against who we are. And often it can feel like trying to climb a mountain, trying to scale new heights, and it can feel incredibly tiring. And something that perhaps I hope you can really take comfort in or be inspired by is this, that we cannot always move the mountain. We might not be able to change the mountain today, but what we can do is choose our path up, around, through the mountain. And what we can do is to always look back and check on the women behind us, to reach back and offer them a hand to bring them up and bring them with us. Because I personally truly believe that the superpower of women is our community, is the way that we center our friendships, that we center children, that we center the care of the world around us, the planet. Caring is our superpower, and together we really can achieve so much. I'd like to invite you to place one hand on your belly and one hand on your chest, on your heart. and set your intention for the rest of the day ahead. Perhaps there's something that's personal, special to you. Perhaps your intention is simply, I intend to remember that I can choose my path forward. And we'll close by bowing our head together, thanking ourselves, our brilliant bodies, and one another for showing up in celebration of International Women's Day, for showing up to enjoy this wonderful webinar together. You can open your eyes, and the light in me truly honors the light in each and every one of you. And just thank you so much for carving out this time for you. It's so important that we honor the softness and the slowness and the renewing practices, especially as the world continues to spin faster and faster and everything seems darker and darker. So please keep coming back to this. You're very welcome to save this webinar. Come back to this part of it whenever you need. You can always reach out to me. You can find me working with AJ Bell again in the future. And team, thank you so much. I hope you enjoy the rest of the webinar. We have some unbelievable speakers for you, so do enjoy it and take care. See you soon.
Thank you, Emily. I hope you enjoyed that session as much as I did. And just to point out, you can find more online offerings from Emily at www.thejoyfulwild.yoga. Okay, on to the main event. And next up is one of our very own rising stars, and we are delighted to give her a platform today to showcase her expertise on the AJ Bell platform. Team leader of the business development team, Georgia Swallow, will provide a short business update and outline a few key developments coming down the line. She will finish up with a short overview on how AJ Bell supports diversity, equity, and inclusion in the workplace, and how the team at AJ Bell are celebrating International Women's Day.
Hi, my name is Georgia Swallow. I am Business Development Team Leader here at AJ Bell. Welcome to our International Women's Day special in the Luminary event. Today I'm going to be talking to you a little bit about diversity and inclusion in the workplace, in our workplace here at AJ Bell, and I'm also going to share a bit of a platform update for you as well. So if you have joined our previous webinars before, you may notice we've got some shiny new slides for today's session, which I'm really excited to share with you. Today, I'm going to be focusing on the AJ Bell Invest Centre offering, but I didn't want to do this without touching on our AJ Bell ecosystem. So within the business, we also have, alongside Invest Centre, AJ Bell Touch for advisors to use, and then we have our custody solutions for the wealth managers, and we have our own DFM, which is provided to us by AJ Bell Investments. Today's session, though, will be focused on AJ Bell Invest Centre. So today I will talk to you about our 4 main pillars that make up our offering to advisor firms. So I'll touch on our strong brand and financial results. We've got the new results for financial year 25, which I will share with you shortly. We've got our trusted platform and service and support levels that I can share with you, our comprehensive range of solutions, which I can share, and our value for money, so the cost of the platform. Let's get into it. Firstly, I will touch on our strong financials and brand. So our brand, AJ Bell Invest Centre, is all backed by the AJ Bell brand. So we're a FTSE 250 company after listing on the stock exchange back in 2018. We currently look after over £100 billion worth of assets across AJ Bell, and we are trusted by over 600,000 customers across the UK. From this gives us consistent revenue growth and really strong profit before tax, which we're proud to talk to you about. In terms of that profit and how that looks, As you can see on the screen, there's been an 18% increase year on year in terms of revenue, and then a 22% increase of profit before tax year on year again. So this shows our FY25 results here. Our financial year runs September to October. Very well and good me talking about our profits and the money that we've made, but what are we doing with that profit? What does that mean to you as an advisor? So as you can see here, we are reinvesting within different aspects of the business. So firstly, having a look at a 14% increase spent on distribution. So the staff here at AJ Bell, the number of staff that we have has gone up, and wage has gone up and things like that. We've reinvested 18% on operations and support, so the operational teams that sit within the business, and also the support that you receive as an advisor when using us as a platform. And then last but definitely not least, a 24% increase of reinvestment into our technology. As you will see, as I will come on to it, there's plenty of spend technology in terms of the developments that you'll see when using the platform, but we've also had a big reinvestment into the internal technology, things that you may not see, but it means that things work smoothly in the background, which give you a better outcome as an advisor. In terms of service and support, as I've already touched on, there has been an increase of investment on this, which has been really beneficial for us. We've come out with a 4.9 Trustpilot star review, 98% of our calls being answered within 20 seconds, 99% of emails being answered within 24 hours, and 99% of monies credited within 1 day. These are really good stats and something that we've always found to be a cornerstone of our proposition and offering when speaking to advisor firms, something that's highly valued across the industry. In terms of technology, so if you've been using us for a little while, you should hopefully have seen the developments made over the past 12, 18 months or so, including our new client onboarding journey, saving advisors 10 to 15 minutes when onboarding a new client. We've got new MPS providers available, a few there on the screen to name a few. You've got online gilt dealing, which has been really beneficial for advisor firms that use gilts. And in terms of money out, you've got all withdrawals, including online benefits, able to be processed online. In terms of what's to come, from a development perspective, we have actually just launched our onshore bonds with Countrywide Assured, so that could have been included, I guess, with what's already came, but that just shows in such a short space of time how quickly we've been able to launch just one of the many developments that we've got coming this year. In terms of what else is to come, you've got a lot regarding automation on the platform, including investments and disinvestments. So a lot of work is going on in the background at the moment to ensure that that's brought out as part of our 2026 developments. We've also got phase drawdown, which will be coming for clients who would like it as well. So I'll talk to you now about our comprehensive range of solutions. So a pretty busy slide here, but just to kind of highlight that the client's at the centre of what we do, obviously supported by the advisor, who then has the option to invest in the several different investment options that we do offer advisors, and then plenty of different products to offer clients as well. From flexible ISA if you would like it, to offshore onshore bonds, GIA for example. You've got all the options that you should need there. Just to sort of bring this back to those 4 pillars that I started with, We have a real confidence in our financial strength here at AJ Bell, and being a profitable platform is something that is really important to us and something we will continue to shout out about. We are really driving that efficiency in every interaction that the advisor has when using us with our award-winning service and technology that will simplify the advice process. And we're hoping that with the continuous developments that we've got coming, that will just continue that efficiency. We aim to be flexible for every client, offering a multi-generational savings platform, meaning that we can have the ability for the advisors to have the children on the platform, for the example, as their junior accounts, all the way to the family accounts. And finally, but definitely not least, having great value for our clients, always being transparent and competitive with our pricing, always watching the market to make sure that we are in a competitive price range. Now, what we're all here for today, I'm going to talk to you a little bit more about diversity, equality and inclusion and how that looks working here at AJ Bell. Diversity, equality and inclusion goes much further than gender equality at AJ Bell, and our framework has been put into place to enable a long-term cultural commitment. As you can see outlined here, our framework is supported by 4 key pillars addressing demographic, cognitive, inclusive practices and ensuring leadership behaviours are all supported. Our people expect a positive and inclusive workplace where they feel safe and respected and are able to contribute to the discussions authentically. Our people want a voice, and through these initiatives, we give them plenty of opportunity and to contribute and to be heard. 2 of our initiatives, ally training and leadership workshops, have already received a 5-star feedback, as you can see here from the testimonials from our staff. These are just 2 of many initiatives currently in place to encourage diversity, equality and inclusion across the workplace. International Women's Day. One of my favourite days here at AJ Bell of the year. So I'd like to share with you our celebrations that will be taking place this year. So firstly, there will be a International Women's Day breakfast, so a leadership breakfast, joined by internal speakers who will be sharing their stories. There will also be allyship training, showing up as an ally to women, and also a payday Friday drinks takeover for the International Women's Day celebrations too. Last but not least, new for 2026, we are going to be sharing the love with some female fan mail, which gives the women in our business the chance to write notes of appreciation. Whatever you're doing to celebrate International Women's Day, other than tuning into this webinar, of course, if it means supporting your colleagues and peers, I think it will be time well spent. As I say, this is definitely one of my favourite days of the year. Whilst being here at AJ Bell, as year on year, the celebrations are just getting better each year, and it's really important for us as a business to celebrate women in the business. Thank you so much for tuning in to my session today. If you do have any further queries or would like to explore anything that I have discussed today, please speak to your local BDM to see how we can help you deliver great client outcomes and add value. Thank you.
Thank you, Georgia. Should you have any questions for Georgia or you'd like to chat about using AJ Bell with our sales team, drop a note in the chat or on the feedback form, and Georgia and the team will follow up with you directly. Next up is a Luminary legend and constant fixture on our Luminary agenda. Lisa Webster, Senior Technical Consultant, is here today to discuss pensions and childcare. She'll explore the changes to childcare support in the UK and show how significant pension planning can help parents navigate the financial cliffs created by the £100,000 tax trap.
So hello and welcome to this special International Women's Day Luminary webinar. I'm Lisa Webster, Senior Technical Consultant, and I'm going to be using this session to talk a little bit about pensions and childcare. So what we'll do is start by, if we can cast our minds back 3 years, we had the budget and it was in March, it was a spring budget back in 2023, this was a budget which was very much focused on childcare. It was about working families was the theme, and about like trying to get people back into work was very much one of the big themes of the budget back, say, in 2023. Now, some of you may have come to our Luminary events that year, later on, a few months after that budget, and I might have talked a little bit about it then, about things that were going to happen in the future, and basically a lot of those things have happened now. And so we're just going to have a look at some of the impacts of the changes that are all now fully in force, and what that really means in practical terms, you know, and sort of around the parameters on that. So the big changes, I say, were really around the extra childcare, free childcare hours for working parents. So I mean, my kids are like 12 and 14 now. Back in my day, when they were preschool, I only ever got 15 hours free, like when they were 3 to 4 year olds, and that was the only sort of provision that there was, you know, back at the time when they were that age. Whereas now for working parents, the system is much more generous than that. So you can get, now this is fully in place, 30 hours childcare from when your child is 9 months old, free childcare under the scheme, if you qualify for it. And so this has been a gradual transition since the budget. You know, they increased the hours for older children, then they brought the age limit down. But this is all fully in force now, and it came in, the last change was in September last year, September 2025. So since September 2025, it has been the case where you can get 30 hours free childcare for working parents for children from 9 months old up until when they get to primary school. To qualify for that, obviously parents need to be working, so that could be a single parent who is working, or for couples, then it means that both of them do have to be working, and there is a minimum earnings requirement on it of £195 a week. So, you know, you have to be working enough, sort of thing, to qualify for that. And then, just as a little aside on this, it is still the case, as it was in my day, all 3 and 4 year olds get 15 hours of childcare, regardless of any criteria of earnings, people working, or anything like that. That is a universal entitlement. So the way I like to think about that is, you know, the 3 and 4 year olds having their 15 hours, that's about the education of the child. That's about, for the child's benefit, preparing them for going to primary school. So that is universal. And then the extra childcare hours is really about, you know, providing, you know, childcare for parents so they can go to work. And so there's qualifying rules around anything else on that. But the real critical thing about the childcare, which I'm going to be focusing on today, is that it is lost if somebody's net income goes above £100,000. So that'll be, you know, if you're talking about a couple where they're both working and they have preschool children, as soon as one of them, if their net income goes above that £100,000 mark, they lose their the childcare hours, the additional childcare hours, to say, all apart from that 15 hours for 3 to 4 year olds. And this is a cliff edge. It's not, you know, a gradual removal. If you're just over the £100,000, you know, it gradually gets to reduce the number of hours you're entitled to. It is just all or nothing. So as soon as you tip over that £100,000, all those extra childcare hours are lost. And the adjusted net income is basically your total taxable income. So that's going to be obviously your earned income, salary, and then it's going to be any interest from investments, dividends, trust income. All of those are included as well. And then there are certain deductions you can take off that. So trading losses if people are self-employed, gift aid, so making donations to charity, to registered charities, can be used. And then the big one for us obviously is pension contributions. So pension contributions can be very, very valuable, particularly for parents who are around that £100,000 mark, because if you can use pension contributions to reduce their net income, it can have a huge impact on their childcare costs. So looking, why personal pension contributions? So, you know, why would you want to use those to reduce your income? Well, as we know, aside from anybody that, you know, parents and childcare issues, see, when you make a personal pension contribution, they qualify for full tax relief. So, you know, whatever rate of tax the individual pays, you know, when they put that into their pension, they can get tax relief at the highest rate on that. Once you're in your pension, once the money's in the pension, it benefits from compound tax-free growth. So no income tax on it, no dividends, sorry, no income tax, no CGT when you sell it on that. But obviously using personal pension contributions to reduce the income can have many, many benefits. And I'll look at a few of those, but obviously focus of this session is around childcare. Particularly when we look at the loss of the funded childcare hours. So this chart here shows the figures from the latest Quorum Family and Childcare Trust survey, which was published last year, 2025. This actually looked at childcare costs in England. They were looked at the costs between November 24 and February 2025. These are the latest figures that we have at the moment. So actually, when this chart was done, at that point in time, it was only 15 hours you could get free for under twos. It is now 30 hours, as I said, that came in from September. So actually, the difference has got bigger than it is in here. But if you just look at the costs per week, you can see, very broadly speaking, there's about £100 a week difference between having this funded entitlement and not. And if you look on the full-time side of things there, you know, you're funding, you're under 2-year-olds basically. 2-year-olds are more expensive because of the childcare ratios. It costs more per hour to have your child if they're under 2 in nursery, and then it gets slightly cheaper as you get older because of the different ratios for staff. And obviously 3- and 4-year-olds will get the 15 hours universally, you know, whether or not you have that funding entitlement. But this gives you an idea of the costs then. So if you're looking at a difference between having the funding and not having the funding of around about £100 a week, that is not insignificant. That is for one child. And obviously the actual, you know, when we get the updated survey, you know, which takes into account the 3 hours that under twos are entitled to now, what you'll actually see in the chart there, and for the, you know, the under twos, that figure, the funded entitlement for working families on the full-time one, that will go down the cost because you'll have more 3 hours included in that as well. So yeah, it will, and so the difference will be even more marked. Now I should say this, the childcare hours that I'm talking about here is for England, and the scheme that was announced in Budget 23 that I've been talking about, that is only in England. It is different, they have different schemes in Scotland, Northern Ireland and Wales, so you know, it's so if you're dealing with clients in those parts of the UK, then you will need to you know, need to look at what the schemes are for them. The next thing I'm going to look at, those tax-free childcare. Now, this does apply across the whole of the UK. This is the same. So tax-free childcare is the government scheme whereby you can pay into a childcare account £8 and you get £2 top up, with a maximum being paying at £8,000 a year per child, and then the government will give you an extra £2,000. This replaced we used to have childcare vouchers back in my day, and it is possible, the childcare voucher scheme was done through employers, and you may have clients that still have that, because if they were in the system before it closed, they can continue, but nobody can join it now. It doesn't exist anymore for new entrants, and it was very much based on your employer offering it, which obviously not all employers did. So this is a system basically for all working parents. Again, there is still a requirement for the parents to be working, that they can pay it, but it's a government scheme. It's not based on the employer offering it to them. So again, I say they can pay in, they can get this extra top up to help them pay childcare costs. So that could be used to pay the nursery fees. You know, you might have some your free hours, you know, if you have 30 free hours a week, and that is only term time only, obviously, you know, you've got the whole year to get through with your child at nursery, you can pay the top up for them, or you're a childminder. But with the tax-free childcare vouchers, you can also use that up until the child is 11. So it's the end of August or the 1st of September, or whatever, after they turned 11, effectively when they leave primary school. So you can also use this to pay for like breakfast and after school clubs, and importantly you can use it to pay for holiday clubs and school holidays as well. So there's much more you can use this for. But again, like the tax-free childcare hours, like the childcare hours, the funded childcare hours, this is lost as soon as your net income goes above £100,000, and it's a cliff edge. And I say this one is UK wide, not just for England. So if you are in England, you know, and your income tips above £100,000, you lose all your free childcare hours, I say, apart from the 15 hours for your 3 and 4 year olds, but also you lose your tax-free childcare top-ups as well. So very, very significant difference of tipping over that £100,000 point. And of course we have the £100,000 tax trap, which applies to everybody, you know, not talking about parents here, just in general, that as soon as you earn over your income above £100,000, then they start losing the personal allowance. And this one isn't a cliff edge, this one is a tapered reduction. So every £2 that somebody earns, the income that they have above the £100,000 threshold, they lose £1 of personal allowance, which of course means they then end up with an effective tax rate of 60% on earnings between 100,000 and 125,140, because they've got the 40% tax, but also they've got the impact of that reduction of personal allowance as well. So, to give an example of, you know, how big this impact can be, though I haven't actually used the most extreme example I could have done, but just demonstrates the point. I've got an example here of Maxine. So last tax year, her income was £95,000. So she had a £95,000 salary when she was working. She's back at work. She's got a 1-year-old and a 3-year-old. She uses tax-free childcare. You know, only £95,000, you can do that. But in this tax year, she's got a pay rise of £10,000. So what is the impact of having that £10,000 pay rise and putting you over that £100,000 limit? Well, first of all, you've got £10,000 extra income, so you've got an extra £4,000 of income tax because she's a higher rate taxpayer. But actually, you actually have another £1,000 on top of that extra income tax because of the loss of the personal allowance. Because she's £5,000 over the £100,000 limit, she loses £2,500 personal allowance. So paying 40% tax on that, you get an extra £1,000 tax. So I could have done a more extreme example where she started on 99,900, you know, 10,000 above that. But this one is only half of it, only 5,000 above the limit. But crucially as well, she loses her tax-free childcare for 2 children. So that is worth, if she pays in the maximum, you know, £2,000 per child. So she's got 2 children, that's £4,000. And she loses 45 hours of childcare. So her 1-year-old that she used to get 30 hours for, that is lost completely. And then her 3-year-old that she used to get 30 hours for, that drops down to the 15 hours, you know, the universal entitlement. And based on the figures from Quorum, you know, that roughly works out as around about £11,385 as an average cost in England of childcare. But that would, you know, extra she would have to pay for those 45 hours for those 2 children. So overall, her £10,000 pay rise has just cost her over £20,000. So when we talk about a 60% effective rate of tax for people earning over £100,000, if you add in the loss of childcare, £60,000 looks, sorry, 60% effective rate of tax looks fairly insignificant because it can be so much higher. And, you know, you could have more extreme scenarios to say, you know, maybe if you had twins who were 1, you know, then you'd lose on 60 hours of your childcare, for example. So it is really, really significant, you know, the difference that can be made. So of course what she could have done when she got her pay rise is actually make a pension contribution instead. Now it might be that the £10,000 extra on offer from her employer, she might have been able to give that, ask them to make an employer contribution, which would be a good option as well, so her income didn't actually go up in the first place. But if that's not possible, or we're past that point and at the end of the tax year, she can just pay in herself into a pension. So if she paid in that extra £10,000, she paid an £8,000 net into her pension. What happens then? Well, she'll get relief of source on that, so she's got 10,000 more in a pension pot. Effectively, she doesn't have any extra tax on it, because the extra tax she would have paid on it for the higher rate tax, that will be cancelled out when she does a tax return at the end of the year. Because she's made the pension contribution, she doesn't lose the tax-free childcare, she doesn't lose her childcare hours. So it's just such a better outcome. So, very good use of a pension contribution. Also, lots of other things that pension contributions are good for, so not all around childcare. So reducing income, there's lots of little pinch points through the system. So first one obviously is £125,140. So that's the point where you start paying additional rate tax. So it means you're not paying that 45% tax rate or higher in Scotland. It also means you get back your personal savings allowance. You start getting it back, so you get £500 on that. If you reduce income below £100,000, you get back your full personal allowance. There's also a couple of points around 80 and 60,000 for people claiming child benefit. So if people are earning above £80,000, they're probably not going to claim child benefit. You should always still complete the forms so they're registered on the system, but they might have chosen not to take the child benefit because it'd be wiped out by the high income child benefit charge. But if you get your income below 80,000, that's a gradual process, so you start getting money back, so it actually becomes worth claiming it at the point between 80 and 60,000. And if you can get income below 60,000, then you're entitled to full child benefit, so there's no high income child benefit charge to pay at all. And then obviously if you get below 50,270, you take people out of higher rate tax back into being basic rate taxpayers, which also has the bonus of getting the full personal savings allowance of £1,000. People have onshore bonds, which are again becoming more popular. People take money from that with no further tax to pay, as long as they stay below that £50,270 on that. So just to cover off a few basics around personal pension contributions, I'm sure it'll be a reminder for some of you, but basically who can pay? Who can make a personal contribution? You have to be a relevant UK individual, that's the term. So a relevant UK individual will be anybody with UK earnings, so obviously employment income, salary, wages, bonuses, somebody self-employed, income from a trade or profession, sole trader. Anybody who's resident in the UK is automatically a relevant UK individual, Crown employees plus their spouse or civil partner, and anybody who is resident in the UK in the last 5 tax years and when they joined the scheme. So you might have clients who are, been living in the UK, joined a pension scheme, they move abroad. For the next 5 years after they've left the country, they can still make contributions into their UK pension schemes. And obviously, you can only pay in up to the higher of your relevant UK earnings, or the 3,600, the basic amount. So if they no longer have relevant earnings, then it would be the 3,600 or 2,880 net on that one that they could pay in. Also worth remembering, of course, that for non-working spouses, for example, if somebody's off on maternity leave, you can still pay in even if they don't have any earnings. If they're not, I say maybe they've taken a career break, for a couple of years or whatever, they're not earning, they can still pay in that £3,600 on that. And you have to be under 75 in order to get tax relief on personal contributions. Employer contributions. So employer contributions obviously don't reduce your income in the same way, other than if it's you have a choice between taking income being salary or having an employer contribution, then you might choose that option. Different set of rules, wholly and exclusively for the purposes of the trade of the business, paid gross into the pension. It's a business expense in the company in the year it is paid. So actually this coming out, talking to you in March, which is coming to tax year end. For employer contributions, it's not tax year end that's relevant really for them. It is going to be the company year end, though a lot of companies do have 30th of March as their year end, so it could be relevant for them still at this time of year, but it's the company year end when it's paid, that's when it counts for them. And employer contributions reduce the profit and therefore the corporation tax liability. Worth touching on that, just because the other thing obviously you need to consider with contributions is the annual allowance. So the annual allowance is the maximum amount of pension savings an individual can make each year with the benefit of tax relief. It is not a restriction on tax relief when the pension savings are made. So if you had a client who earned £500,000, theoretically they could put in £400,000 into their pension and they would get tax relief on the full amount. But of course they would have a tax charge because they're over the annual allowance, and so for that reason it's probably not the thing that you're going to recommend that they do. But the restriction on the annual allowance is, you know, on the total. You can get the benefit of the tax relief, then you actually claim the tax relief, and then there's a corresponding tax charge if you exceed it. And when you're looking at annual allowance, obviously you need to include your personal contributions and the tax relief element from HMRC that goes into the pension, and the employer contributions as well, because the combined amount is tested against the annual allowance. Finally then, just a quick reminder on the annual allowance. So it's £60,000 is the standard annual allowance that most people will have. We also have the money purchase annual allowance, MPAA, of £10,000. So that's just going to be for people that flexibly access their benefits, by which I mean they've taken taxable income. So taking PCLS, your tax-free cash, doesn't trigger the money purchase allowance. Taking a scheme pension from a DB scheme or an annuity, that doesn't trigger the money purchase annual allowance, but taking income from flexi access drawdown does, taking that first pound. If you have clients that are still in cap drawdown that started before 2015 and they're continuing to take that and it's still in cap, that doesn't trigger it either. We then have tapered annual allowance for your high earners. Those are for people with adjusted income above £260,000 and threshold income above £200,000. Basically, once they're over that upper limit of 260, that's a taper which starts reducing their amount of their annual allowance down to the lowest it can be for anybody is £10,000. We also have carry forward as well. So a little look at the carry forward basics. So it's important to remember that it's unused allowance that you carry forward, not tax relief. So you have to, for a personal contribution, the individual has to have the earnings in the tax year that the contribution is made, and annual allowance in that sense is irrelevant. So if you had a client that had just inherited £100,000 and they wanted to put it into pension, but their earnings were only £40,000 a year, and you know they might have made minimal pension contributions in the last couple of years, they can't put £100,000 into their pension as a personal contribution because they don't have the earnings in the tax year. It doesn't matter if they've got enough carry forward from previous years to do it, they don't have the earnings in the tax year. So that's the starting point on that. Also, when we talk about people using the basic amount, people, so non-earners, when they are, but you can still put in, if they're UK resident, you can put in the 3,600 gross, 2,880 net, you can pay that in for them. You can only do that once a year. You can't carry that forward, that basic amount. You know, they may have lots of annual allowance available, but if they haven't got any earnings, that's the maximum you can put in per year. We do get asked about that one quite a lot. So yeah, it's the allowance that's carried forward. You still have to have the earnings in the tax year for personal contributions. You carry forward, it's 3 years you can carry forward from. You can't carry forward money purchase annual allowance. You can carry forward the normal annual allowance and the tapered annual allowance. They have to have been a member of a UK registered pension scheme in the year that they are carrying forward from. So going back to the example, even if you've got a client who's moved abroad, so if you had a client who works in the UK, became a member of a pension scheme, they went abroad for a few years, and then we didn't have any UK earnings. They either weren't making any contributions, or they were just doing the basic 3,600, you know, for the 5 years or less that they were over there. And then they move back. If they have, you know, £200,000 of earnings in the UK when in the year that they move back, but they've actually got, you know, 3 years of carry forward available from the time when they were abroad and they weren't making large contributions, they can use that carry forward. They can carry forward that annual allowance. It doesn't matter that they weren't in the UK in the year that they are carrying forward from, as long as they were a member of a UK registered pension scheme in that year, then they can still use it. And you always use your current years first and then the oldest unused allowance. So for this tax year now, you've used the 25-26 allowance first, and then you go back to the oldest one, so 3 years ago, the 2022-23 tax year, and then, you know, then the intervening tax years on that. So this year, if you're watching this in March 2026, the maximum you can have is £220,000, because back in 22-23 the annual allowance was 40,000, and then it's been 60,000 ever since. If you're watching this at a later date in the new tax year 26-27, then that'll be 240,000, because it'll be 60,000 for every year. Okay, so just to finish off then, my key points really are that, you know, just reminder for, you know, if you have got clients with preschool children at that age, just how valuable free childcare hours are. And then we have the tax-free childcare as well, which so that can be used for children up to the age of 11, primary school age children as well, wraparound care, etc. But both tax-free childcare and the free childcare hours are lost as earnings just tip over that £100,000. And I say it is a cliff edge. So any clients that you have who are in that situation or around that mark with children, then really, you know, it's just pension contributions can be very, very effective in those scenarios. Okay, that is all from me. I hope that has been interesting, and I hope to see lots of you in person in summer for our live Luminary events. Thank you.
Thank you, Lisa. If you need any clarification on any points Lisa raised today, then please note those on the feedback form or send us a chat and we will get back to you after the webinar. It is now time for a 5-minute coffee break, so go grab a top-up for your refreshment, and we look forward to delivering the final 2 speakers in our webinar today. Hello and welcome back to our Luminary webinar, our special edition to celebrate International Women's Day. Our penultimate speaker joined us last year for all our in-person events, and she was rated so highly we had to invite her back to present on today's webinar. Caroline Shaw, Portfolio Manager at Fidelity International, will provide a macro update exploring the key investment themes shaping 2026. She'll touch upon the global policy backdrop, emerging market opportunities, the continued impact of AI on tech earnings, how to navigate valuations, and the risks around a potential US growth deceleration. There is an awful lot to cram into this next 20 minutes, so take notes and set the scene for markets in the year ahead. Next up, here's Caroline Shaw.
So I'm Caroline Shaw and I'm a portfolio manager in the multi-asset team at Fidelity. Today I'm going to cover a macroeconomics update and how that links to the positioning in our multi-asset funds. Alongside Chris Forgan, I'm responsible for several multi-asset mandates for UK investors, from our open range, which has a full flexibility of implementation across asset classes and geographies, to our allocator range, which is a low-cost, passively implemented solution. We're also launching an MPS in mid-April, which will bring the full Fidelity toolkit to the MPS market, allowing us to trade nimbly across all asset classes to deliver the expected risk-adjusted returns to investors. We've got a large team around us, not only within multi-asset, but across the whole business, allowing us to gain insight from on-the-ground meetings that our analysts are having with companies, as well as hearing from our in-house macro and quants teams. Within multi-asset, we've also got a dedicated research function to help us identify not only the best opportunities, but also the most appropriate ways of accessing them. So on to the macro update. One of the easiest ways to communicate the macro backdrop and how this impacts markets is to talk about the key investment themes that we see for this year. And they're in front of you now. We've really just thought about 5 key themes. And so today I'm going to run through each of those 5, talk a little bit about them, and then about the positions that relate to that theme, because I think that will bring those themes to life for you. So first theme is one of global policy, and we are in an environment of rate cuts. The chart on the left shows how many countries, central banks around the world are cutting rates, and you see the peak for 2025 with a lot of rate cuts globally, and that trend has continued through the latter part of 2025 and into this year. GDP growth is reasonably strong, and inflation appears pretty well controlled globally. We're seeing the first signs of, well, fiscal stimulus in the US is definitely on the agenda following the administration's One Big Beautiful Bill, and we're going to see some tax checks hitting US consumer pockets this month, next month. So that fiscal stimulus is helping in the US, which of course is an economy that's dominated by the consumer. So any money that hits consumer pockets that gets spent is then really positive for the broad economy. We're also seeing that stimulus in Japan and also in Germany. So policy overall is broadly supportive for equity markets and for gold. We've got equity exposure, and we've typically taken this via value managers for cyclical exposure. And cyclical exposure is where we're really trying to access companies that are doing well because businesses and individuals are spending. We've also got exposure to US mid-caps in this environment. They should benefit from rate cuts. Their financing is much more linked to short-term rate moves than other finances. So they tend to perform well in favourable economic conditions, which is what we've got now. And then I touched on gold, and everyone's aware that gold's had such a stellar set of returns in not only 2025 but also 2024. It's been a good couple of years for gold, and we think there are still some good structural reasons to hold gold. Primarily there are 3. The first is that central banks have demanded more gold to put in their reserves. There's a few reasons for this. Some of them have been diversifying away from US dollars. And if you look at emerging market central banks, they have only had around 7 to 11% of their reserves in gold. Now, when you see an asset moving as it has done so strongly, it's not unreasonable that central banks might want to allocate more to it. There's clearly a lot of potential upside capacity to own more gold from the emerging market central banks, and that's a trend we've seen, particularly from China. We also think that retail demand, the second tailwind for gold, is that retail demand is expected to remain strong, and especially again in China. The property market is well challenged and has been for a couple of years. The stock market has also been incredibly volatile. There have been pockets of strength, but there have been immense pockets of weakness. So if you're a retail Chinese investor looking to put your money somewhere, gold has been a good place to put it. And so that is a structural tailwind. And the last one is the rationale around diversification. We've seen for most of my investment lifetime, we've seen bond equity correlations negative. So from 2002 to about 2022, it was a nice period to have both bonds and equities in portfolios because they were negatively correlated. Actually, when you go further back, bond equity correlations are largely positive most of the time, and they are again now. And when bond equity correlations are positive, you need something else in your portfolios. And so that something else could be gold. And so many portfolio managers or retail investors looking to diversify away from holding just bonds and equities have moved towards gold. And we think that structural tailwind persists because of the need to diversify. So the key risks to this theme, there's the other thing we like to think about when we look at these themes. There are key risks, and that would be that inflation returns and that the US decides to cut interest rates into what is a pretty stable growth environment. This is a real risk. The markets are pricing a couple of rate cuts still in 2026, and there is a real risk that those will happen into a pretty strong economy, which would be inflationary. So higher rates would be less helpful for some of the trades that we've talked about here. We have got a commodities position in place to try and hedge a little bit of that inflation risk, and also to lean into that cyclical environment that we've talked about here. So let's move on to theme number 2. Theme number 2 is Goldilocks for emerging markets. Goldilocks, not too hot, not too cold, just right. We believe it is a just right environment for emerging market equities. They benefit from a weak dollar, which is what we've seen over the last 12 months. More broadly, the dollar has weakened. Looking at the central chart on the screen, you can see that the valuation of emerging market assets remains cheap versus developed markets. So that's a positive tailwind for the asset class there. The other thing is that sentiment is still mixed. Typically, investors aren't over-allocated to emerging markets at present. Though global investors are starting to return, but the positioning is still slightly below historic norms. So that's a positive too. There is some fiscal spend in China which should be helpful, and metal-producing countries are benefiting from the AI-driven demand and energy transition demand too. So this environment, which is supportive for equities, is actually also supportive for bonds. So we're not just talking about emerging market equities here, we're also talking about emerging market debt. Central banks there have much more capacity to cut rates. They're starting from much higher levels, and there is a policy credibility and a fiscal discipline that is now present in many emerging markets, which gives this scope to cut rates. In portfolios, we've benefited from having broad emerging market exposure. There was an incredibly strong rally in Korean equities through 2025 and also some parts of this year now as well. We've been able to benefit from that. We've got exposure to India and to Chinese equities, and we've supported both equities and emerging market debt for the whole of 2025. And the portfolios as a whole have really benefited from that breadth and diversification. Now, when we talk about risks to this particular theme, they would include higher rates, any strength in the US dollar would not be positive, and tariffs have been a bit of a constant risk for emerging markets. So our third theme is around technology. Tech earnings have been the only game in town for some time. We've seen some broadening out of earnings in the final quarter of 2025, but it was both emerging market and US that led the global earnings growth to its highest level in 3 years. Now, earnings growth in the US has picked up to its highest level in 4 years, but the broadening outside tech was sustained. So whilst AI adoption is real, and you can see that in the middle chart here, that we can see the share of companies adopting AI, we can also see that the market returns have been driven by earnings. Now, that's really important. It is not just the re-rating of companies based on sentiment. Earnings have delivered, but there are fears which have been highlighted in the last few weeks with the sell-off across software. Now, our view is that it's been overdone. The fundamentals look strong for many of those companies. Many of the critical enterprise applications, they can't just be easily replaced. If you think about software pertaining to HR or finance, you can't just replace that with AI overnight. There are business risks around that. So we think that the sell-off's been overdone, but we're aware of the risks. And our investment is primarily focused on the semiconductors, the platforms, and the infrastructure. They're the earlier phases of AI development. So in summary, we like the tech story, and we believe that earnings remain a positive, but we are aware that inflation resurgence is a risk here, and any change to that AI narrative is definitely a risk. To mitigate somewhat against those risks, we've got a put option in place to protect our portfolios against any share price market movements and to manage overall risks. Let's move on to our fourth theme, and this is about credit and the valuations in credit spreads. So valuations in credit and in high yield are expensive. Spreads are tight. What that means is that the amount that you get paid is closer to the amount that you would get paid on a government bond than normal. So you're not earning as much for the risk that you're taking. So in this environment, we're using strategic bond managers to navigate these challenging markets. We've got a focus on macroeconomic trends, and then a second portfolio that focuses on capital preservation using high quality government bonds, and then the income generation that you can get from those higher yielding credit names. Now, there are risks, and we're looking carefully for a few things in this tight valuation market. We're looking for issuance. If you see more issuance, that can indicate an increase in borrowing across leveraged markets. We're looking at corporate leverage more broadly. That would be typical with a late cycle approach. If you see inflation, that would be a key indicator of overheating, and spikes in inflation might cause central banks to hike, and that would push yields up and bond prices down. It would be a bad outcome for bonds. We're also keeping an eye on the debt rising faster than earnings in corporates. If that happens, it indicates that there is rising leverage in the corporate space, but also that there is unproductive borrowing. Moving on to our final theme, and this is one of US deceleration risk, and it's about risks really. We've seen some weakness in US business surveys. We've seen elevated valuations in certain sectors, and there's been evidence of the labour market slackening. In this environment, we like defensive assets. We've added exposure to both consumer staples and healthcare late in 2025 in order to manage these risks. And if we see policy easing and a resurgence in growth, then that sort of defensive approach will be unhelpful. But at the moment, we feel that having full diversification across a range of different investment types and asset classes that will respond differently to the market moves, that will allow us to manage risks in portfolios. So overall, our messaging is that in order to manage portfolios in this current market, diversification is our friend.
Thank you, Caroline. A really insightful session. Always a pleasure to have you join us at our Luminary events, such an advocate for women in investment as well. Okay, on to our final session of the day, and what a way to finish. An inspiring real-life encounter with AJ Bell's chair, Fiona Clutterbuck. Now, I feel I can talk about her height because she's actually taller than I am. She may only be 5'2", but let me tell you, her voice is neither small and her energy is mighty. She packs a lot of punch with her passion for business. I was really excited to chat to her about a number of topics, including female representation in leadership, the value of diverse boards, her career reflections, and the role of emotional intelligence in the workplace. So settle in for our final discussion of the day. It is a good one. Please welcome AJ Bell's chair, Fiona Clutterbuck. Fiona, thank you so much for talking to us on this International Women's Day Luminary webinar. It's brilliant to have you with us. I just wanted to start looking back, because you've been the chair of AJ Bell now since May 2023, and there's been a lot of talk about the female influence on a board. How do you find the balance?
Yeah, actually, I find it quite amazing that I've been on the board now for nearly 3 years. It's gone, in some respects, it feels much longer, but in others, it feels like it's gone in a flash. But so since I've joined the board, the number of women on the board as a proportion of the whole has gone up. We now have 50% female board, and I do think it makes a difference. I mean, I think I've said this before, but obviously I don't know what it's like to have an all-male board, but I have sat on boards where there have been only one female, being me, and the nature of the conversation, the nature of the questioning and debate, I think is very different when there is what I would call gender equality, so the right proportion of equal proportion of men and women around the table. I mean, it's interesting. I think our struggle going forward will be to not have too many ladies on the board. So we've got two gentlemen stepping down because they're either timing themselves out or are timed out during the course of next year, and the likely candidates may well be female. And so my struggle will be not to get female representation on the board, but actually to get the odd male as well, because otherwise we're not going to have gender equality. And I do feel that that's important. To have too many females can skew the balance in the same way that having too many males can.
One interesting problem to have, and I suppose it speaks volumes about the progress that has been made. You were talking there about the need to have that balance. What, in your experience, are the key benefits then of that diverse leadership team?
So what you really want is people who think about things in a different way. So you want some degree of cohesiveness around the board table, because you can't have lots of people coming from lots of different directions, but you do want people bringing different life experiences to the board table. And if we were all middle class white males or females, that also wouldn't be bringing the right sort of experience on the board table. So diversity for me isn't just about gender diversity, it's about making sure we have ethnic minorities on the board, making sure we have the right sort of neurodiversity around the board table. It's about people from different socio-economic groupings, and also about people being able to sort of bring their true self. I mean, it sounds a horrible expression, but to the board table and share those experiences. So we don't just want people who look like us on the board. We want people who are going to bring a different perspective, because, if I look at, for example, age, if I look around the board table, most of us are 60 plus, clearly Michael and Pete aren't as the EDs, and one of our new NEDs is not. But when you think that most of our customers are between the ages of 35 and to 60, you know, we should have a better representation of younger people on the board. So that's one of the other aspects of diversity, because they bring a perspective that we, who are all over 60 and, you know, have probably finished our executive careers, can't bring.
And I suppose with that diversity, the ability to be yourself means that you feel that you can have a voice and you can speak up, because it's all very well to have diversity around the table, but if some people don't feel that they have an equal opportunity to be heard, then that can just be a tick box exercise.
Yeah, and actually I think that's quite important. So you know, we have made huge strides within the FTSE 350, changing boards for the better in terms of getting better gender diversity. So something like over 70% of FTSE 350 boards now have achieved the 40% target. That is really good news, and you know, we're I think most boards are at 43%, so we've overachieved relative. But there are things that we still need to do, and from a board perspective, one of my sadnesses is that there's only something like 16% of those boards that have a female chair. Okay, now that clearly isn't right. We should have a much better balance of female chairs, and I think, well, I would say this, wouldn't I, because I'm a female chair, but I think female chairs are very good at ensuring that you do get to hear all the different voices around the table. And so just to follow up on your point, it is important that people feel comfortable that it's the right atmosphere around the board table, so that if there are issues that need to be raised, they feel they can put their hand up and raise their hands and say, I'm not comfortable with this, or why haven't we thought about that? I mean, one of the other areas which I think, so we should congratulate ourselves because we've done pretty well at boards. The area where I think we still have an awful lot of work to do is on exco succession. We actually have a very small proportion of female CEOs. I think it's something around the 8% in the FTSE 350. That clearly should be higher, but the only way we can increase it, I think, is by having a better number of females represented on exco, and also leading up to exco -1, and that's where an awful lot of work has to be done at the middle management levels, going through into exco -1 and on to exco, so that we can ensure that we do get much better gender equality around the exco table. It is relatively easy because of the tenure of non-execs. You know, they do 6, some may do 9 years, but and there's a continuous change, because you try not to have everybody stepping down at the same time. It's much easier to change the personalities around a board table than it is around an exco table. You will see much greater longevity for people sitting around an exco table, so it is a little bit more difficult to achieve that level of change at the same time. So we shouldn't be surprised that we haven't done as well, but I think that's an area of focus for many businesses now, including our own.
It leads me very neatly on to the fact that we are celebrating International Women's Day. It's just a day, and in some ways that can feel uncomfortable, but in other ways it does focus the mind a little bit. And from what you were just saying, there is still an awful lot of work to be done in the financial services industry when it comes to equality.
Yes, I really do believe there is. I mean, to some extent, the regulator has helped us in the financial services sector, because the FCA has actually imposed certain targets for financial services industries to achieve getting on to gender equality. And so, you know, it hasn't been totally voluntary, although people like to say that it is. It isn't voluntary if you work within the financial services sector. But I think what has happened is that because this target has sort of been imposed on us, and we have then adhered to it, people are realizing the benefits, and they can see the diversity of thought that we do get as a consequence of having greater diversity, both in terms of colour and in terms of gender equality and all the other things I've mentioned around the board table. We need to be, it's always good to have at least one disruptor on your board, someone who's really prepared to ask the questions that you probably would prefer not to be asked. But it's a good idea, and the way that we can do it is by ensuring that we get greater diversity around the board table. I think International Women's Day is important because it does provide us with that one moment in the year when we are really focusing on women. And I know it resonates. I have 3 daughters. It resonates with my 3 daughters. One of them is a podcast producer. She is doing a podcast around International Women's Day. It makes people think again about what we need to do about women in lots of different capacities, not just in business.
It's so important to hear from women like yourself on International Women's Day, because I also have 2 daughters, and for them, seeing women on the boards, to see women chairing boards, to see women in positions of power, leads them to believe that they can also achieve that is open to them. So looking back on your incredible CV, if you could give them, all women, not just my daughters, but one key piece of business and career advice, what would it be?
So I'm going to cheat. I'm going to give them 2 pieces of advice.
Excellent.
The most important piece of advice, I think, is always believe in yourself. Okay, it's so easy to have self-doubt, and you should know that even at the ripe old age of nearly 68, I have self-doubt. You know, I mean, it's imposter syndrome or whatever. You always think to yourself, you know, even with that sort of very hyperbolic reference to my career, I think, oh gosh, that can't be me. Okay, so you know, it's very important to believe in yourself, because if you don't, it's very hard for other people to do so. So I always think that you should focus on the positive elements of what you bring, and you know, save the self-examination about all the things that you could do better for you know, quiet moments at home, you know, if you ever get them. So always believe in yourself. But the other really important thing, I think, practical piece of advice, is plan. So one of the things I did not do with my career was plan. I sort of fell in from one job into another. I was a lawyer, then I went into investment banking. I never planned where I would like to be in 5 or 10 years' time. All my male colleagues did. They all said, I want to be a director by the time I'm 30, I want to be a managing director by the time I'm 35, and these are the things I need to do to get there. I just felt enormously grateful that someone was giving me a job and paying me for it, and I really enjoyed it, and I could even be allowed to have children as well. I mean, so it was this very pathetic sort of grateful, but actually if you don't aspire and you don't challenge yourself, you can get forgotten. Okay, so relative to my male peers, I wasn't banging on someone's door saying I'd like that promotion. I never did that. And all my male peers were. And I know from being a manager of people, male and female, that women do tend not to ask for things, whether it's pay rises, whether it's promotions. And I remember the one time that a woman did actually come into my room and say, I want promotion, and she said, these are the 5 reasons. I thought, wow, and that was it for me. She'd earned the right, you know, she'd actually put herself out there. It's planning. Believe in yourself and plan, and don't be afraid to ask for the things that you want.
That is a great bit of advice, and I wish I'd spoken to you 20 years ago, because I confess I similarly fell into all sorts of opportunities, and it's great that you can make the most out of those and hopefully progress, but planning, so massively important. And I guess women are often described as different in the workplace. We must celebrate our differences, that's what today is about, but also sometimes some of those differences can be aligned as negative, and I'm thinking particularly of a word that I absolutely hate, emotional.
Yeah. Okay, so I like emotion, because for me, emotion means that you feel passionately about something and you bring a different sort of energy into the room if you feel passion about the topic. So I believe some degree of emotion is a really, really good thing. But I know I've experienced, and even in my later career, I can think of one or two situations where I have been over emotional. Okay, I have allowed my temper to get the better of me, and I look back on those moments, and I know that if I had handled that situation slightly better and not been quite as emotional, I probably would have got more of what I wanted at the time. So I do think emotion is a good thing. I think it's very important to be true to yourself. So some people like myself, I mean, I use my hands a lot. I come across as probably quite emotional at times. And I think to a limited degree, to some degree, that's a good thing. But there needs to be that check and balance, because from my perspective, as I said, I don't think I achieved what I wanted to do when I did lose my temper. And I think it's also sometimes quite uncomfortable for someone being on the receiving end of an emotional sort of outpouring, to receive it and to respond appropriately. So I do think emotion is important. I am, somebody who feels very passionately about a lot of things, and a lot of work things too. And on occasions, I know that I have allowed myself to get perhaps overwhelmed by that emotion. It's not a good thing. And my trick is to say to myself, do not respond immediately to something where you feel that you're likely to be slightly out of control in terms of your response to the point you want to make. Always, it's like sort of not sending that email, which is a difficult one. Okay, always, if you can, think about it overnight. If you don't have time to think about it overnight, just take 10 minutes out and think, do I still want to say that in the way that I was planning on saying it? And I think, if it was going to be a very over emotional response, then the chances are you would probably think, perhaps I can say that better. Just write down what it is that you want to say, think about it, and then say it. So I agree. I think one of the great things that women have brought around the board table is a degree of emotion, humour, lack of ego, compassion. And all those are very, very good traits. But too much, and that, as I said, mine usually manifests itself as anger. And that's not good either. And I mean, I know, because my girls will say to me on occasions that when they were little and I lost my temper, being on the receiving end of me being angry is not a comfortable place to be. So, that's when I need to rein things back a bit.
Have you learned that over the years? And did you have people in your early career in particular who supported you and taught you and gave you something of a blueprint?
No, is the answer to that. I have learned it over the years, but I've learned it through experience. So sadly, because in the early stages, my early career was a very long time ago. It was 40 years ago plus. There weren't mentors then. I didn't have anybody. There were no females, because I was usually the first female doing whatever I was doing. So I didn't have mentors in the early stages of my career, and that is a great sadness to me, because I think mentors have a very real role to play. And as a consequence of that, I did start mentoring other people, not just females, but men as well, and throughout my career. And I still keep in contact with many of the people that I have mentored over the years. But no, I didn't have that. The time that I did get somebody who did help me hugely was actually when I sort of embarked on my non-executive career. And there was a gentleman there who was a chair of the second board that I went on. And he was a wonderful mentor, because first of all, he said to me, Fiona, I think you have the capability to become chair, which was something I had never aspired to do and thought I couldn't possibly do. So he planted that seed. And that's wonderful to plant those aspirations. But also, he said to me, Fiona, these are the things you're good at, and they're really strong skills, but these are the things you really need to work on. And I will help you work on those things. And it was, to some extent, what I've just referenced, a degree of too much passion sometimes. And there was also a little bit about getting experience doing different roles around the board table to equip me better to becoming a chair. So, and that was enormously helpful, but that was the very first time I actually had anybody being a meaningful mentor to me. And, you know, I didn't expect to get that in my 50s. I really didn't. I thought I probably should have known enough by then. But one of the great things about working, you know, into old age is that you can still learn an awful lot from those around you, and I still do benefit from that. So, but I do really strongly believe in mentors, and you know, we have a sort of a loose sort of mentoring system within AJ Bell at senior levels, and I do think that sharing one's experience and providing people with tools to do their job better, which is what mentors should be able to do, is extremely important. I mean, so when I think about my achievements, looking back, when I finally stopped work, I don't think I'm going to be thinking about, you know, that I was a chair of this or chair of that. The thing that I will be mostly proud of are the people that I've helped, you know, fulfill their potential. That will be my legacy, in the same way that my daughters will be my legacy. It'll be, you know, making sure that other people really do what they would like to do and what they deserve to achieve.
Fiona, I could talk to you for hours, but I think on that really uplifting note, we will leave it there. Thank you very much for your time.
It's lovely to speak, Danni. Thank you.
Thank you, Fiona. Now, I might be a bit biased, but I felt that that interview really was the perfect end to our Luminary webinar today. Experiences and stories shared, some poignant advice, and just a really honest conversation with a straight-talking leader who inspires so many women in business. And with that concludes our International Women's Day special webinar, flying our flag of support under our Luminary series. Thank you so much for celebrating with us. You know, having your support really does help us keep these sessions in production. Hundreds of advisors turn up and tune in to our in-person events every year. And I know I said it earlier, but we know that your time is valuable. So thank you so much for choosing to spend it with us. One final reminder, don't forget to register your interest for our in-person event on the feedback form, and we will send you a save the date. We'll also follow up with an invite link to the tour so you can share that with your colleagues and peers. Please do bring your colleagues along. Look, everyone is welcome, including the gents, of course. We love to share these sessions with you in person and invite you to our free yoga session as well. Yes, really. And we also finish our talks with a decent dose of networking. Absolutely, cheers to that. For now, I hope you enjoyed today's talks and took something away for your own personal and professional development. Enjoy the rest of your day, and we look forward to seeing you again very soon. Bye for now.